S4 Capital, another one. Look at this. It's Martin Sorrell's sort of advertising agency. We looked at this last week, and I think it was Robert. Was it you, Robert, who mentioned the chart on this? But we'll have a look at this because the chart is hammered, and it is one of those ones that will have a nice play. S4. Everyone pretty much, right? There's no expert at this. There's no expert in investing. That's why I like it so much, because we're always learning. And even experts lose a crap load of money because they think they're too much of an expert. Never think that. You can always get wiped out. And then again, the only thing that stops you getting wiped out is portfolio management. It's really key. Again, it's not on a nice downturn. They came out with news and it dropped pretty much. Was it 8%? It's had a little bounce. And in fact, the news. Let's go to the news. S4C, not S4C. That's a Welsh channel. That's a Welsh TV channel. If anyone fancy S4C, 232 market cap, fourth quarter trading. I was looking at that. I was in like decline. Now this is supposed to be obviously. You're going to hope growth comes back, but at the moment there's no growth there. Look, margin EBITDA 10-20%. Net debt expect to be the lower end of guided range, 180 million. What? Net debt 180 million? You're like 232 million market cap. And their debt almost eclipses that. That's nuts, isn't it? People have faith in Martin because he's done it before. It may do, but it may do it again. Who knows? But the moment it's not looking very good. Let's have a look. 30th of June, there we are. So you have to realize that the enterprise value here is 336 million because they've got debt of 316, and cash of 213. So obviously you take that away out of there. But the cash flow, operating cash flow, good. Last 6 months, now they're saying they're not growing, but it was in June. They did have a 16 top line. All this was growing. And the value seemed okay, actually. Well, it's minus there because then they didn't make any money on net profit. And in fact, let's look at the figures. So the EBITDA was 32 million. Operating profit there was that. It's improved, but hang on. This with the it's not operating. So yeah, so they are making a loss. So pretty much a net loss of, look at that. It's gone down from 82 though to 19.7. That's not bad. But yeah, gross margin, I think it'll rally. And in fact, look at the forecasts, okay? Then it seems like there's upside here. Not well, if you look at it, I mean, depending on what multiple you put it on, but they're on the sales multiple is 0.4. So, I think there's room here. And I'm doing big technologies. The multiples I put on that, 15 times EBITDA, 20 times a third of that, half of that, and there's upside here. So I'm saying S4 Capital is one for your watch list. You need to see it improving and maybe getting a bit of growth there because the growth isn't, even on no growth, it's looking like there's upside here, valuation perspective. So I'm saying, yeah, it's worth putting it on your watch list. Quite interesting, but I think you need to improve. And honestly, momentum-wise, it's dreadful. Like I said, in the red. But that's a typical cyclical stop. That Future PLC as well. Obviously, Future make money, and it could very good margins as well. But those kind of stocks, cyclicality of the advertising market should do very well. And it's come down a lot, isn't it? I mean, and that's a lot of Martin's hype there. 850, 39 pence. So it could have a cracking rally once they start, getting less worse. The figures come out are not as bad, So yeah. Sorry, it's previously look. I mean, again, what would have protected you here, right? let's say you like this company and it broke the 250-day moving average. Of course, on the spreadsheet, that this would have given you points, okay? And so you decide to get in. All right. Let's say it breaks 50-day moving average here. No, is it? Breaks it here and it breaks previous highs. So let's say you got in at 180 and then you put a 20% stop loss in. Yeah. And it went in fact, let's use this easier. So let's say you go in at 180. Let's say you go once here pretty much it broke up new highs, 173, and then went to 274. That's 43% upside. Now, if you put a stop loss in, pretty much 20% increments, then it wouldn't have gone down below that. It had gone up, moved your stop loss up to break even, got to 40%, moved up again, maybe another 20%, and you made 20%, and then realized it's gone down. Now, if you thought, I'm in for the big 300, 400% here, look at where it's gone. Minus 80%. So you could have made a profit rather than a loss. And that's just, portfolio management, essentially, isn't it? And it's just about maths. It sort of makes sense.